Happy snowy Saturday from the Midwest. Wanted to go over a market recap here to kind of see where we are in the weekend overview. And this market's in stall mode. We've been talking about crawling up here on lighter volume. This is the weekly. Let me show you in the daily. You're looking at the SPY. We've been talking about, hey, we're crawling up here in lighter volume. Want to go up and retest these highs, right? But if we didn't have the volume, it'd probably roll over. Well, go look at what happened here in the weekly, because the weekly is the most important chart, right? On this week right here, we had 373 million. Last week we went up and tested it on 322, obviously less than that. And then this week you can see from the volume candle at the bottom of, volume bar at the bottom of the page, so we came off on volume this week, almost 400 million shares. So this is rejecting the top of the range, which means we could come down and test the bottom of that channel that we've been in since September, by the way. Same thing with the Qs. Qs are a little weaker than NASDAQ. What we were watching was the breakout level here of 310. We continued to crawl up here last week, 243 million, right? Not enough. And then today, or last week rather, came off with volume 300 or 268 million. So this too can come down and test the bottom of the channel. We're still bullish. We still think there's all-time highs coming. It's just that as long as you're inside this channel, it can go back and forth, bounce back and forth between the upper line and the lower line. We're not really headed anywhere right now. In fact, next week it's probably more likely to go lower than higher. What stocks are hanging out and holding us up? Apple. Look at Apple. After the breakout, it's hanging out, wants higher price. Google, hanging out, wants higher price. You can see all this buy volume the last couple of weeks, and now it's just kind of sitting here. That said, with the Fed rate cut that's happening, probably a lot of rotation out of tech and into more interest rate sensitive areas like finance, right? Financials. So Google continued to run after its breakout. I think you're up 80 or 90 points from the original breakout level in here, right? But you'd probably want to take some off. The projected price target for Goldman Sachs is 11.25, but I suspect there'll be another ABC structure between now and then. We've actually sold out of that and rotated into JP Morgan, because look at JP Morgan. It is it's breaking out. So the benchmark you want to watch here is 58 million shares here. And then we took it out this last week and closed higher on 63 million. That's a confirmed ABC structure higher, which takes you to the 360 something area. I don't remember what the projected price move is, but this one's higher price. Gold setting up as well for higher price, but you'd want to see the breakout here. Obviously, we're coming up here in lighter volume, so you wouldn't want to buy it here. Could roll over and head back downtown, so you'd want to wait and take this out on volume. Would confirm the next ABC structure up. And the reason for that is Avago, right? Avago broke out, had volume on earnings this week, Broadcom, and closed underneath the breakout on expansion of volume. This wants to come back down and potentially test the bottom of the channel. So you would not be bullish Broadcom here. This was our big candle here of volume higher, and then here. So we had 182 million here. We came down on about 227 million this week. So this is a failure of price and volume that wants lower price. Other stocks are just kind of hanging out, not ready yet. Tesla, going after the highs, not there yet. You wouldn't buy it here. Nvidia, looking more bearish than bullish. Microsoft, same thing. Amazon, not ready. Meta, not ready. AMD broke down below the breakout. We've been bullish AMD to the 297 area, but once it breaks down from this range, it can go back down in here and retest the lows. Nothing be wrong with it. So it's a confirmed ABC structure to 297, but it's for whatever reason not ready yet. The only one you want to stay away from is the Bitcoiners, right? This turned out to be a dead cat bounce in Monster Strategy. Still wants to come down here and test the 145 area. So Bitcoin doesn't look very good at the moment. So with that said, you go back and look at the SPYs, S&P 500. We're just range bound. We continue to be range bound. And so we're looking for more consolidation, right? So more consolidation to come back in, and it's not ready to break out yet. And so looks bearish for next week, short term, still bullish the market. And QQQ is the same way, right? And all the good news is baked in perhaps. So be careful if you have exposure to the market right now. Make sure that you adhere to your stops. If you're comfortable shorting, you may have opportunities to short in the short term. And if you don't have to do anything, I'd stay out of the market and wait for a breakout. So it breaks out of these channels here. We're headed to significantly higher in the Qs and also the SPYs. Use those as proxies for the S&P 500 and the NASDAQ. So going significantly higher, but wait for the break. People that buy and trade inside these upper and lower ranges get chopped up. As swing traders, if you're a day trader, that's a totally different matter. But as swing traders, you get chopped up in here and wait for the breakouts. Hope that helps. Have a good weekend, and we'll talk to you later.